So tonight, the topic we'll be talking about would be this very interesting, what we call the sixth wave. Now, remember, the sixth wave was a term coined by a scientist, but made popular by a very famous influencer based in Singapore. And he's also in this business, the educational businesses, something we can all learn together. I'm also learning from this influencer. And right now, I want to share with you what I understand from a macroeconomic view about the sixth wave. But I've added a little bit of twist regards to the impending stock market correction, because many people are talking, we are seeing this double top, which I've been talking a lot on the Facebook in here. So what is truly really happening in the market? Are we seeing a correction? Are we seeing a boom right now? So I'm going to give you a real-time update in here to what's happening there and show you especially some of our existing members, even those of you who are in Smart Robie user. And I do think that many of you Smart Robie user would able to benefit what I'll be talking about, the sixth wave in here. So what is the sixth wave? This is definitely one of the topic in here, but I've given a little bit of a cue to everybody. The sixth wave is the AI boom, AI stock boom. Now, so definitely are we seeing the perspective that the sixth wave is a continuation of a stage 2 markup? Because those of you who are our regular YCOF and also the VSA members would understand what we call by stage 2, a continuation of an uptrend market. Now, we also want to look at the third thing, which is the bullish case. Why is the market able to go higher and why is it not correcting? Now, people were looking for, including myself, were looking for a market correction because we have seen NASDAQ has gone up by 37% year to date. 37% year to date is a very, very strong number, by the look of it, that he has gone up so much. So what's the story behind it? Can it possible, hang on, or would it possible be eventually be so-called seeing the market correction that what we are seeing? So that is what's happening right now. And for those of you who may not get the graphs of it, you can also watch this again on the video in here to give you a better snapshot of what's really happening. At least you can listen to it twice. And also we're going to sharing you the more important why you are here tonight is the trading opportunity. And I'm going to be showing you how you can use either the Smart Robie and the Pentagon Guider plug-in to look into those marketing. And many of you are already in the trading view, so make sure you get up your trading view chart in front of you. And those of you who are watching this on your little small mobile handphone, never mind, when you get back home, you can try out some of those shares that we're talking about. So let's take a look at the first thing, which I flashed on much earlier in here. I've been right. I don't get right all the time, but this year I pretty much got it right beginning when we took off from the first week of January when the market came in. I started talking about this get ready of the market crash, because the market has really picked up a lot after the market bottom last July and also in October. And since then onwards, we have seen this market continue to grow and grow. So I have to give some sort of basis why this market going and also where the market is. And then on February 15, the market continued to hit high. The purple color that you see here is the NASDAQ. And then on 22nd of February, I start talking about the AI stock, which is right now a very popular influencer is coining it to be the sixth wave. The sixth wave boom in here, but it actually comes from a very scientific term, which I'm going to talk about. Actually, it's from MIT. A guru in MIT actually coined this sixth wave, and understanding the impact and the ecological effect to the overall market will give you and also my personal opinion what's likely to happen in here. And going forward, we did have, remember, in the end of March, you all remember the Silicon Valley Bank SVB that went bust, right? And finally Janet Yellen came in and rescued it, and only 6 months today. Remember, the banking crisis happened on 22nd March. In 3 months, no one is talking about the banking crisis anymore. Everyone is started to talk about the AI boom. So like it or not, pretty much of our attention, what we see in the market, really driven by the media. If the media want to tukar saja dia punya topic, then we already changed the topic that we have in here. And then on the 29th of March, I started to introduce to the tech stocks, okay, to the tech stocks. So if you move forward to the coming months, to the 31st of May, you can see from here, I started to go into more depth because I felt that technology driven by the so-called AI stocks, or coin them as the sixth wave, is something that has a lot of opportunity. So the question you're going to be asking now, is it time to buy? I miss out your January, Martin. I listen to you. I come and listen to you in February. I also miss out. I come and listen to you May. I also miss out. Now, right now, the market has gone up high. What are you saying? Would that come true or not? Which is always been the same question that many people will also ask. They've been coming a lot to my talk. They've been listening. Of course, many of them take action to buy some of the stocks I've talking about and kept it, and they made money. I'm very happy. But do come and support us by introducing your friends to Smart Robie so they can benefit. Because that's the least you could do, supporting this channel in here and supporting the movement that we've been doing to really get people up into it. So right now, I am still very optimistic that this market can go higher. And this is partly also due to a comment made by another guru called Tom Lee from Frontstack. This is a person I've been following up in here. But at the same time, we must also be very, very careful when we listen to guru. So if you look right now, the market, the red one that you see here, NASDAQ, has gone up by 37%. And ever since, the Nikkei has also recovered 23%, one of the best performing. And this was also made by the comment by the Warren Buffett saying that, hey, this is a Japan stock market, the Nikkei. It's something that you should be looking into the market, while the rest, including industrial Dow Jones, were only up 3% in here. While you can see here, the Jakarta index 0.11, which is turning positive year to date. The Singapore is down -2. KL is playing catching up, because last week when we were talking about in here, the condition hasn't improved, and of course we all know the Thailand, the hopeful newly prime minister currently has a case against them for some sort of a fraud allegation in here. So we can't say that he is likely to be taken out, but that is causing a lot of uncertainty on the Thailand stock exchange, and also Hang Seng, on the backdrop of what we see presidency with the continuing backlash of banking sectors that is not creating the kind of good signal that China is ready for investment. Instead, many foreign funds are living out, including some of the big banks like JP Morgan has started to write very negative about the investing and trading of the stock market landscape in China. And that's why we see the Hang Seng is a -5% here. But I do believe the KLCI going forward, you see here, is playing catch up right now, and it has a lot of room to move. If you look at the VSA 360, for those of you who have this, you can see the last 6 months, January, February, March, April, and June, all negative. I have never seen anything like that before. 6 consecutive loss-making months. Okay, we don't have that. Usually when we see this kind of thing, I believe many of you also know, which I've talked about, is the geopolitical fear about the local state election, which is going to be held on August 12th. Yes, I think it's August 12th. That's right. August 12th in here, nomination going in a month, and August 12th, which is only 1 month from now. So that's going to be a lot of campaigning the last 3 months in here. And as also, I'll be attending a lot of the ceramah, especially I live in Selangor here in Petaling Jaya. So that could be interesting. So remember that if the result of the local election are favorable, then you will see the month of August. Okay, the month of August will be likely to be positive. And right now in July, we are already up 1%. And usually the kind of recovery that we see will be in the range of 3 to 4%. But do take note, eventually what I believe is that the KLCI will catch up. The KLCI will catch up, and they don't really, be negative 7% all this time in here. All right, now the person that you all should pay notice is the Fundstat CEO by Tom Lee. He has been right pretty much of the time from last year, from last July when I started to pick him, because some of the information he said, and one of the things he said today, or more like yesterday, is the inflation, right? I think he probably had some sort of insight to what's happening. And those of you who know, this evening or US time, 8:30 in the morning, which is our time about 8:30 p.m., the CPI figure came up. The CPI figure was very favorable, and he already predicted that was going to be a big drop, and that's why investors should load up on the stock ahead of the CPI figures. And if you have been following that, and remember, all the live Facebook I've been talking about for many, many weeks, going back to months, I've been talking about the same story in here. And I do hope that you already loaded up, and don't wait until, the ship already left, only load up lah. Get the smart Robie, get the VSA 360 and get ahead, right? For those of you who have understand. Anyway, many of our audience, our members, it's something that we're talking about a lot more, and this is an opportunity for me to update them. So he also said that the KLSE S&P 500 is poised for 2% rally this week and should push the index past 4,005. If you know, those of you listening later on, just go over to your S&P 500 or just type SP 500 on your trading view. You have the futures, you can type ES2, okay? ES2 will take you to the mini S&P. And he expected the June CPI figure, which actually came out, continue to the except, which means inflation is coming up. So for the first time, he's issuing a tactical buy call, which means buy call is something that we are right now, really teaching our members and educating them how to look for this kind of opportunity. And furthermore, he also thinks that investors are too quick to embrace higher for longer narrative, and you see a soft inflation print, which is this Wednesday here, could ease the pressure on continuing interest rate hike. Because coming to this interest rate possible hike in coming July, right? Because they want to watch the CPI figures. It's look for imprint for 0.2 June. Actually, it dropped. I'm going to show you the figure in the next slide in here. So core inflation is coming down. Expect to slow down to 3.1. Actually, it was very, very close. And if it's correct, then inflation will be the lowest. And that's why we see the 2.5 to 2% of the Fed target will likely to be achieved in here. So you can see, ta-da, this is the US interest rate just came out very, very hot from the inflation. You can just Google it, CPI June 2023, and you will get almost 3%. Now take note, okay? Now previously we were at about 4%, 5%, 4%, 2%. Now if you go back this chart here, let me just go back, right? You remember last year, June and July, okay? Going back to last year, June and July, you notice the stock market started to pick up. It actually bottomed up in July and then started to pick up. And this was due to one single factor, the inflation. So right now you can see the inflation is really coming down, just like what Tom Lee has said in here, the 3% in here. And of course, we have this gentleman. Who is this gentleman? Anybody, right? Can care to share with me in the thing? Come on, I'd like to see more participation in here. I'm giving very good, valuable information. Who is this person? Anyone want to tell me in here? All right, if not, give me a thumbs up. And for the good update that I give, no doubt he is Jerome Powell. So with the low interest rate coming from 5% now to 3%, he will be thinking about, maybe I can pause interest rate. Yes, thank you, David. Maybe I can pause interest rate, right? So with the pause on the interest rate, what is likely to see on the technical side? Are we seeing a third time breakout? Now, this is a Pentagon guided chart on the Dow Jones. You can also get a VSA 360, or you can look at the S&P 500 on the smart Robie apps in here. So if you look at the Dow Jones in here, it is still, yes, it just turned green Pentagon yesterday, right? You can see here, let me just bring up this laser pointer. You can see it turned green Pentagon in here. But the question is TTBO, stand for third time breakout. Now, third time breakout is very, very powerful. 1, 2, 3. So we are seeing tonight, can it happen the third time breakout? If it does happen the third time breakout, a lot of things, which is the fund manager funds track, is saying that this is likely to go hit higher. Now, remember, I think the last high that we achieved before we had the Ukraine war, that was in 2021, January, before Ukraine war came in. Last year, 2022, was around, I think, 38,000 in here. So a breakout would definitely be nice to see from here. Okay, let me just go back to my... Okay, so right now you can see, let's take our attention now to NASDAQ, right? So you can see from NASDAQ in here, also very similar, forming a double top. But very importantly, as part of our Wyckoff and also the VSA in here, we can see lots of sign of strength. You can see here a lot of listing tests, line change tests. We got uptrust. So every time when the uptrust is taken out, then we have line change and spring that also showing you the 20 and 40, which is still sticking above. And I do think that tonight, depending tomorrow, when you look at your smart Robie after the update around noontime, many of these charts may have gone higher in here. So definitely tonight, myself and my coach Arif, we're going to be showing you how to navigate this very delicate situation. All right. So remember, when the market is bullish, right, be careful when listening people for tips. Always know the kind of methodology they're going through and whether you will get any good information in here. But definitely our smart Robie, those of you who are looking at will put you into the right spot in here. So do be careful in here. If not, you will miss the biggest stock gain. Now, this is from 2009 to 2022 using the green Pentagon and the red Pentagon. Definitely, you know, by following it in here, you could say you would probably be more beneficial here, at least being guided by an up signal or down signal in here. Wow, many times people will tell you that this market is going to crash, just like some of the early impending signal in here to put you in a better position, at least to be there to take off of any opportunity. Now, let's talk about the sixth wave. Now, the sixth wave were an innovation cycle that was developed by the economist Joseph Schumpeter, right, who coined the creative destruction in 1942. He was pretty insightful in here. You have the first, second, third, fourth, and then it's a sixth wave. I'm sure after we go through maybe 2040, I'll still be around, don't worry, 2040, which is another 17 years. As long as you guys, they have Facebook, I will always be here to 2040. I hope you don't get bored of me to 2040. That's another 17 years, provided I don't retire that soon. So make sure you support me and make sure we're all in good health, and we will continue to talk about stock market and educate many of you, which I really enjoy doing in here, as you can see. So you can see over the last 50 years, going back to 1990, the combustion engine. The combustion engine was one of the biggest inventions, and also chemical and so forth. Then we moved to the 1950s, all right, where aviation becoming more and more popular, enable people to travel. Then you have the electronics, the invention of the semiconductors, right? Remember the semiconductors? Then in the 1980s, when internet came in, 1990s and 2000 in here, the digital network. So those has been the transition many of you got. But those of you who have just just got into the work, maybe belonging to the generation Z in here or the new millennium, you may not have gone through this. So this is definitely a good a history of exercise to look at. So from here onwards, what we have done is basically look in the first 50 years, which is, the invention of the steam power, right? We're not gonna go talk so much about the past. Let's talk about the current fifth and the sixth wave. The fifth wave is slightly behind us. I think just after we got up from the COVID in here and the breakup of the ChatGPT. Remember ChatGPT just came out last year, November, right? I still remember after 5 days, ChatGPT came out. I found out about this. I said, wow, this is fantastic, man. And of course, going forward, you have seen some of the changes that he made in the market and how much he has driven this so-called stock market, and that's why we are here. So right now is a lot of talk on AI and IoT, Internet of Things. Even maybe one day your stapler, this is your stapler, right? It can be a microchip, and then will tell you when you run out of chips or it's not working well. They can talk to each other. So robots and drones, which is very common in here. You talk about some mechanical robots together with the AI built in. We have seen that clean tech is all about the EV and the battery technology, and many of our Malaysian companies are also in here. But the case that really drives this was ChatGPT. Now, take note of this sixth wave. This sixth wave is predicted to move for 25 years. Again, this is from the professor, what is his name again? Schumpeter, right? And he said that, the year that the sixth wave may go on is 25 years, but usually a bull market only lasts 8 to 12 years. So is this going to be true? Is this going to be showing that this sixth wave AI stocks will drive the bull market for 25 years? Of course, many people also talk about the bull market being only 4 or 5 years, but we have seen this market really been driven a lot and started to push up higher. So right now, if you have seen the market down last year, 2022, now going forward, 25 years is a case for a sixth wave. Of course, we're not that optimistic. Like if you can last to 2023, I'm already very happy here, because we've got 6 more months to go. Okay, 6 more months to go. But if that is a new bull cycle in here with a period of 8 to 12 years, that means this sixth wave will generally drive longer where it is. Now let's look at the innovation of the sixth wave in here for the number of years. The focus has always been digitalization, digitalization, AI, IoT, AV, okay, robot, drones, and clean tech. That will go on for 25. We are talking about a lot of them also deal with the climate change in here. All right, so let's talk about what has been really, really profound over the last 6 to 7 months is the deep learning and the robotics. The AI, generative AI has really come out and becoming very mature, where it can go into mimicking even human. Of course, they also talk about the end of humankind, right? Many things say it, but even today I came across saying that Bill Gates is very optimistic that AI will advance the human. What do you think? Do you think that AI will destroy the humanity? Right? What do you think? All right. Maybe not. All right. So AI has definitely helped up a lot the last 6 months. And of course, we all don't know, right? We were never able to predict the future in here. So let's take a look at the market that we have, or the sixth wave here. All right. And of course, why is this important is to play the long game. We have talked about the 25 years of the sixth wave, and then the average bull market of the 8 to 12 years. So why is this important? If you look at it, the US playing the long game that you see in here, even going back to 1981, US small cap, US equity technology stock has been one of the biggest performers, despite all the big drop that you have in the history. Now, this is again from the Goldman Sachs, one of the report that I retrieved in here. Now, if you look at the annualized return per year, right? So if you go back, even during with the Chinese war and so forth, let me just change this. Yeah. Okay. You can go back here. You can see that from $10,000, and you invested over a period of 21 years. Again, why? Going back to the long game, if AI can give this kind of boom for 25 years, we are not optimistic 25 years. If you can get boom for 4 years, so very happy, because we cannot predict the future. We don't know whether another COVID-2 or COVID-25 will be coming, or COVID-26, because we got COVID-19, that's the year it came. But we definitely know that the AI does support a model where it is going. Now, if you have it in 10,000 and you compound it using some historical in here with 11%, that's going to be 850,000. So think of it as being the long game in here. What is 850,000 when today you can invest in a good education together with the Smart Robie, which is almost free to you after office hour in here. So please support us and share the Smart Robie apps with your friend in here. Wow, an opportunity to make $850,000 over a long period of time by playing the long game in here. Now, also in the US stock landscape, that one of the reasons why I think many of them is the AI able to automate a lot of the knowledge worker. Now, because the stock market always work based on company that is doing well in the long run. When we say doing well in the long run, which means margin improves. When you see margin drop, the stock price will drop. When you see margin increase, the stock price go. And one of that, we all know, the labor or the so-called resources by human cost up 40 to 60% of it, especially when you move up to the high tech in here. Not so much in the capital intensive, but the so-called the tech job. So a lot of these, we're using the generative AI software that they're doing, including lawmaker, accounting. That's good. Now, let me give you an example. If you are a lawyer and you'll be given a law book, right? Let's say the Company Act, you can make it into a PDF form, get ChatGPT to read it for you, and then eventually get ChatGPT to create a question and an answer, right? It can be done. I've seen it done before. And you can create also questions, come up with answers, so you can always test yourself. Or you can ask the ChatGPT, what are the clauses if I'm going to do this and this? According to the Company Act, what is that? Previously, you may have to ask the lawyer, or you have to read the book, spend maybe 2 to 3 weeks to do it. But right now, within those information, right, generative AI using ChatGPT can be done. And that's why it can boost productivity. Even a person who is not well known in legal may able to handle the Company Act law. So that's why lawyer is really, the paralegals are really been attacked here. The lack of the word I'm using here is attack, but it will increase the output of it. As such, big S&P 500 stocks, right? Like right now, the Infotech, it is the heaviest weightage, having about 26% in here, with Microsoft 6.7, NVIDIA 2.7, 7. So basically, when you buy the S&P 500, these are the usual stock people talk about. You can see within India, you got AMD, Salesforce, Intel, only 0.4, Adobe, Accenture, Qualcomm. These are all the Infotech, but the three names, the AI, Microsoft, a little bit of Apple, and NVIDIA. But the question you may be asking is, are they still overvalued, right? Overvalued. So let's take a look right now by checking out our smart Robie in here. Before I pass the floor to Coach Arif to show you how we use the Pentagon Guider to look for shares in here. So right now you can use right on the smart Robie. Of course, smart Robie, we use the stock fundamental in here. Definitely the first one you can see is NVIDIA on the S&P 500. Definitely you can see from the PE wise. Yeah, let me just switch on. You can see it's 72 times the sector average, which is already high, but this fella is over 200 times. ROE is only 18 times, doesn't pay much of a dividend. Let's take a look at the next one is Microsoft, right? Not bad. Microsoft is rated 4, okay, with a PE of 35. So this one's not overvalued, but definitely NVIDIA is overvalued by comparing the sector average. This is very high in here. And Apple being even the least expensive, being the lowest PE, is at 32 times in here, and all rated about a 4, and Microsoft rated a 4. So these are two very distinctive so-called consumer and technology stocks, which I feel that should be in your long game, should be in your long game in here, and you will do fairly well on that moment in here. So even going back to 22nd of February, when I start talking about the NVIDIA, ASML, Intel, and AMD, those who have been following, and if you have bought a little bit and started to trade, or you're playing the long game, you have done pretty well. We can see NVIDIA has a very wide economic mode. ASML also same thing, but AMD has a narrow mode, which means the margins. When they say mode, usually they're referring to the margin. They can still maintain their margin in here because no competitor can come in for that one. All right. So judging from it, I want to invite now our next speaker, Coach Arif, to teach you not to miss the boat using the 4-hour intraday chart, and together coupled with a weekly chart, you're able to pick up things that you're not to see for. So I'll pass the floor now to Coach Arif. Coach Arif, are you there?
Hi, Martin. Can you hear me?
Coach Arif? Yes.
Can you hear me, Martin? Test, test. Martin, can you hear me? Test. Can you hear me, Martin? Doing a sound check. Okay, right. Great. Okay, hi everyone. This is Coach Arif here. So I'll be sharing my screen. Hold on, yeah. All right. So as you can see, I'm looking at these 3 time frames here, which is the weekly charts, which is on my left here. The right side will be the daily chart, and below here is the 4-hour chart. Now, I'm doing a bit of a research for the weekly chart, and so far the observation is that weekly chart will be as a nice pattern and more abiding to the rule for our VSA or volume spread analysis. So combine that with our green pentagon below here for you to trade and hold for a bit of a longer time frame will be a nice one for what you call this, for a longer period for you to make a good sum of profit. Of course, this one we need to see our from our VSA 360 here to see whether there's any potentials of a stock for us to catch or not. Okay, so usually for our dashboard we have is usually they will screen through for daily charts. But sometimes daily chart can be a bit of a zigzag, as you can see, like we can see here, where they have a bit of a gaps and so on. So how to overcome it? Usually for the US market, I would like to look at a weekly chart here. So you can see on a weekly chart, the chart is more readable. Volume there is more manageable to read. So you can see here, like there's a bit of a drop earlier on in 2020 for Microsoft. And this is during the COVID time. Okay, you can see a lot of high volume coming in and market being supported, and it just moved back up there. Okay, so here we can see there's a double bottom here, and from there it just turn up, go all the way up here, right? So it's more readable for a weekly chart. And at the same time now, we are trying to explore for the 4-hour charts here. Okay, so I can share you what would be some of the homeworks that you can do over the weekend to look into the charts. All right, so first things first, for those of you who are having Trade VSA 360, it'll be better for you, it'll be easier for you to screen through the stocks. Okay, so I will just share with you the guideline here. Hold on. Okay. Right, you can see the screen, right? Okay, just take out the pointer. There's a pointer. Okay, right. So first thing, this is will be like a sort of like a weekend homework. You can do a bit of a back testing for those who have the 360. So firstly, you have to go to your Pentagon Guider screener, which later I will show you the steps. All right, and then you can go and set the parameters inside there. We have usually a few parameters, but we focus on the price range between 0.2, the lowest, and the highest will be at around 30. All right. Then we have the ST range here. ST range here refers to the smaller MA range inside the what you call this, the screener. So we set to around between -5 to around 5, the highest. And then we sort the table by price from lowest to the highest, and from there we will screen through the stocks, and we will see the stock that has the nice range that is followed there. Then we will look into it, and we will switch the stocks from trading view there to weekly time frame, and we will identify the latest green pentagon and look for the potential setups. And if there is a good setup in the stocks there, then we will shortlist for the next action plan, which is whether do you want to commit to enter a trade for that particular stocks, or you just want to monitor until you have more confidence. You can pair it together VSA green pentagon with your other indicators as well, such as MACD and so on. All right, then after that, once you have the confidence, then you can make the entry inside there. Okay, so you can take a screenshot of this. All right, but I think in Facebook also you can have a go through later on. All right, if you want, you can take a screenshot first. Okay, then all right, so now I'll be showing you using the Pentagon Guider how to go about with it. So here we see here is the dashboard 360. Okay, the one that we have here on the left side, you can see there's a screener. So screener here we have the Pentagon Guider buy, and this one here usually is more stocks is screened through inside. Okay, so from the screeners here we have the Pentagon buy. We select the exchange, we select will be NASDAQ. Okay, there's a few exchange you can see, but we focus more on the US market, NASDAQ. Okay, and from here you will have the few of the stock the dates that you can select to go through with the screener. So we select on the 3rd, we select submit. All right, then we select the price range. Just now we indicate as 0.2, and then the price we select at 30. Okay, then the ST we focus on -5, and we go on to 5. Okay, so you can see here there's a screen of a stock that within the parameter that we already set, and then we go through the price. Okay, then from the price here, we select from the lowest to the highest, and we go through the stock one by one. Okay, usually we will want to see the trend, which is between This is all within the range. So we will want to see those stocks which is on a green color, the ST and the LT here. Okay, usually LT, if it is negative, means it's indicating that the stock is on a downtrend or is far away from the 200 MA line here. Okay, so you want to avoid that. Usually for this, where the stock is somewhere nearer the MA line here, that's the 200 MA line and the ST line within the range, that's where we want to focus on. And you can look at to the industry, what kind of the stocks that is more related to the sector. If those of you who are looking for sector trades, you can see the companies which falls under that particular sector or industry in that sector, and you choose that particular counter to have a look at it. Okay, usually for ETFs, okay, in our TradeASA here, the 360 dashboard, we have here indicates as ETF or preference shares. This one usually we will try to avoid because preference shares, not really much of an action. And I usually go for those which is related to the industry itself, like pharmaceutical. You can see here, they have biotechnology and so on. So ETF, we will try to avoid it, okay? And like Martin mentioned, there's some of the stocks in trend, which is the technology like Apple and so on. So we will look into it as a part of a case study, okay? But basically, this is how we go through the stocks. So for example, here we can see, okay, this one here is technology. So the ST and LT is within the range. Like LT here, you can see it's just picking up a bit above the LT trend here. So we go to IMMR, okay. So go to your trading view. Then we go to IMMR, okay. So we look at the weekly chart here. Okay, let me just put fresh here, okay. IMMR here, okay. And we look at these 4 time frames here first, okay. So what you can see here, let me reset this one, okay. All right, so the chart is on a green pentagon, okay, recently, but it's still moving on a sideways. But you can see it's very nicely that the volume is on the getting lower and lower here. So we just zoom in, and we can see here that the stock is on a dry volume coming down here. Okay, so but if you look at the weekly chart, it's still on a what you call this, on the orange zone or the red zone. It's already on the green red pentagon here. So this is usually where you want to see whether the chart, is there any follow through, is it going on a downtrend or not. So if you look on the left side here, the highest it went was at around $16, and it went on a landslide coming out all the way. And you can see like it's sort of like making sort of a cup and saucer or something, that kind of a chart pattern. Okay, it's like coming down here and going up, right? So that kind of momentum is making. But you can see here on this red pentagon here, it doesn't follow through. In fact, it's sort of like make like a double bottom, something like that. Okay, but then you have to be careful because now is somewhere is testing around the 200 MA here. So this is how you observe or study the chart patterns, where if this, using the moving average as a guide, as a support resistance, if the price doesn't able to break through or just hovering around it, so you may want to monitor first and see whether there's any potential or not. Okay, so usually this kind of stocks you may want to give a go, or you may want to observe for the next couple of weeks if you're using the weekly chart. But if you go for hourly chart here, okay, so you can observe here and see, here we can see there's a bit of a nice one, okay, but it's just that on green pentagon, there's something missing here, okay. Now, usually for green pentagon, what we observe is, if you have a green pentagon and the bar has a line change, okay, is a line change bar on a higher volume, that's where you want to high chances that the stock will be moving, break out from the sideways range and to move on the higher ground. Okay, you can see here we have a green pentagon, okay, is a line change bar, but the volume is just not that enough for it to move upwards. Okay, so it's just like going on a sideways here. Okay, now here is a bit of a 50-50 whether you want to take it or not. Usually for our members, we always advise if you take on a green pentagon here, if the bar is not a line change at all, just an empty bar here, you can consider to take, but sometimes the price may come down. As you can see here, it comes down here. Although it doesn't go follow through all the way down, but if let's say you have a very tight stop loss, you may get kicked out from the market. So you may want to wait first and see next couple of bars. If the price were to move up again, then you may want to consider entry. But in my kind of a style of trading, I'll prefer have a line change bar. okay, and with the nice volume coming in, that's when we want to consider entry here, okay. And also at the same time, you observe on the left side whether the MA, the moving average here we have is, which is the 20 MA, and this is the 40 MA here. So what we want to see is if there is a convergence, okay, from 40-20 to become a 20-40, then that's where you have what you call this, a green tick in your list that this stock you fulfill a criteria of a potential stock that is going to break out from the sideways range to move higher, okay. So this is immersion. So this is how you go through one by one of the stocks, okay. Now you go through the next one and see if there's nothing, or if all of it are mainly ETFs, then you just give it a miss and you go through onto the next date and see, okay. Now the one that I'm showing you here is based if you're using on a what you call this, to observe based on a weekly charts, okay. So we will usually what we'll do is, because the one inside here usually is updated by the next day morning. So on a Saturday, you just spend maybe like around 1 hour to go through the days, okay, by the steps as I showed to you the guideline. Then once you observe already, if there's no stock for you to observe, then you just wait for the following week, okay, to make a trade inside there. But if let's say there is some potential stocks inside there, then you can zoom in to see on the hourly charts, okay, right. So here we'll show you some examples of the technology stocks that Martin mentioned, which is one of it is Apple, AAPL. Okay, so you can see this weekly chart here. You can see from here it started on a line change. Okay, here if let's say volume not coming in, you can wait for the next bar. And you can see in this bar here on 30th of January, it has a very high volume coming in, a line change. All right, so this is where you want to consider for the entry, and then you can see from there on it just moving up onwards. So if let's say you wait the next bar for the opening for the week, from here on all the way up here, okay, nearly around half. Okay, let's say on the higher part here is around 28% upward movement. Okay, so here AAPL. Okay, this on the daily chart here. You can see on the daily chart it has moved quite a distance. Okay, from here. Okay, you can see now there's a few entry that you can make, right? If let's say you are studying a pullback entry. So one of it is based on the green pentagon, and you can see the volume coming up high. Then you can enter on the line change after the next bar opening. Okay, then from there you enter all the way up here, and here maybe is the point where you want to exit because we can see upward movement, then such a very climatic volume. Then you want to exit first. Okay, exit first. Then you see, observe if there's coming in on the next pentagon, if there's a line change, or you have probability that you can enter. If it is not, then you can just observe and see that if it is okay, you may want to enter, and you just write on according to the green pentagon inside here. Now, for the 4-hour chart, okay, the 4-hour chart, sometimes when you enter or when you observe, the volume may not be as, or it's quite hard to read something like this, okay, something like this, right? So what you can do is just do a bit of an observation or comparison. If let's say on the hourly charts, you can see here, okay, what you can do is you look at the trend overall from the daily chart here. If it is all the while is in green pentagon, then you may want to consider for entry here. Okay, so of course along the way there is a bit of a red pentagon, because if you're trading on a shorter time frame, there's a bit of a noise that you get kicked out from there. All right, but otherwise you can just enter as long as the whole on the daily chart is on a green pentagon. Then you can enter and you can just ride along with the trend. Okay, so here will be the same as well. You can see on the line change, you can see there's a bit of a high volume here compared to the previous bar. All right, and then on here is where the price is on the low side here, the volume is lower. All right, so you can consider entry from here, and you just ride on with the trend. So let's say you go for 4-hourly charts, right? Usually you would not want to target quite a higher percentage of profit. Usually you want to go like around 5 or 6%. okay, then you can just exit from the market, and it's sort of like a rotational kind of a thing. So you just like in and out a lot of times based on the green pentagon, okay. But of course, after a while you are a very expert in the trading, then you can do a bit of a discretionary by entering on the green pentagon, and when red pentagon comes out, you can decide whether you want to hold within the trade or you just want to exit. Okay, so this is take a bit of a skill for you to trade to use inside here, right? So this is example of Apple. Another one I'll show you is AMD. Okay, so for AMD, you can see here, okay, this one example where we have a green pentagon, but you can see here this particular bar. Let me just clear this one here. Okay, remove all drawings, right? You can see this particular bar here. There's not a line change. There's no indication of a line change, but in fact, it's sort of like this bar closing in somewhere in the middle. And what you can observe here is that when there's no line change bar on green pentagon, usually the bar will just starts to come down. Okay, so again, if your stop loss, you have your own stop loss and it's a bit tight, then usually you get kicked out from the market. If you follow based on the ATR, you will not get kicked out from the market. All right, but sometimes here will be like a bit of a can say a white loss if let's say you use a weekly chart here. Okay, so let's say the lowest it went is around like 20%. So whether can you stomach 20% in that particular week or not, that's something you need to think about. Okay, but in my point of view, you usually wait for the line change bar on green pentagon, then that's where you may want to consider for further observation. Okay, so if you go on this one here, AMD on a daily chart, okay, so you can see, okay, this is where it happens. This is when 21st November 2020. Okay. So 21st November, so somewhere around here. So you can see the bar coming down here, right? So in the smaller time frame, we can see there's a lot of this green pentagon coming in. So again, you want to enter, you just wait for the line change, then it'll be better for you. Okay, so on the 4-hourly chart, let's go to AMD. Okay, now I can see here, here, line change bar, okay, on a high volume coming in. Then it is where on the next bar you can let's say you enter on the next bar here, and the highest you can see here, it went all the way up here, it is around 37% here. Okay, now again, if there is a momentum, as I said on a daily chart there, as long as there's a momentum, then you can pull the bar all the way up until it reaches somewhere at the peak there, then you can exit. Okay, usually you can exit if you hit your profit target, or if the price, you can see there's a bit of a weakness. So like here we see a bit of a weakness where you can see there's a white spread bar, okay, closing on the lows, and the volume is quite high inside here. And you can see the bar on the left side from the low, it goes all the way at the top here, and this is where usually an indication you may want to exit from here. Okay, now if sometimes you may see uptrust on the initial early upward movement, so this one usually you may want to consider it as price trying to break on the previous resistance level. Okay, if you can see on the left side here, where the uptrust we have here on the left side, this is where a lot of the resistance coming into play. So the bar here tries to break out, but then this sense there is a bit of a resistance, that's why it starts to come down. And you can see when it comes down here to test more supply, the volume is a bit dry out. Okay, so when we have the line change breakout from here, that's where usually means that the price successfully break the selling pressure here and continues to move outwards from here. Okay, so if you study VSA, then these are the things that you be able to interpret accordingly. Okay, and you know where you should be selling. All right, so usually we will not sell here, we will sell here. Here maybe you can take precautionary measure. If we break out, sometimes it will do a test before it starts to move up. But if let's say it's a successful one, then you can just fall onto the trade and move on with it. But if it is not so good of a trade, means it starts to break down, coming down onwards, then you may want to avoid the stock entirely. Okay, so this one, observe if the big momentum trade there is on the uptrend, then you may want to hold your position and go right accordingly to it. Okay, right. So AMD we saw just now was Apple. Another one was NVIDIA. Okay, these are some of the technology stocks we can do observation. Okay, right. So you can see NVIDIA here. Okay, so NVIDIA here you can see there's no line change on the weekly chart. Okay, But on this next bar after the green pentagon, you can see a line change here, volume coming in nicely, and this is a quite healthy one. Okay, break on the left side, the resistance area. So you can consider an entry on the next bar here. Okay, and if you see enter from there, all the way at the peak here would be around 119%. Okay, now again, it's quite hard to determine which are the stock that is going to go up higher or make you 100% or 30%. Okay, it's quite difficult to gauge from there, but I believe that as long as you're able to make a decent profit from the market, that's what matters the most, right? Okay, so this is NVIDIA. Okay, this is a daily chart and this is weekly. Okay, right, great. So we observe here, right, the same thing also. Okay, let me go to the hourly chart for hourly chart here. Okay, now you can see here, right? So these are the ones where was it just now? Okay, here, right. So you can write here, okay, you can observe here, all right? This is where the green pentagon on daily chart is, okay, on 1st of May. And you can see this particular bar here, okay? So here we have line change, but then the price moves sideways a bit just to do a bit of a test to make sure there's no more supply before it starts to move up, okay? So there are times where you enter, okay? Let's say the price doesn't really move up that much. You may want to follow accordingly, okay? As long as it doesn't hit your stop loss, then you can just follow a bit. If let's say the price doesn't move anywhere, then you want to exit first and wait for it to break up. Like in this case here, it started on 1st May and it only started to break up on this particular UT here on 16th of May. So it's around like 15 days, including weekends, 15 days of a holding period inside here before it starts to break up here, right? So if let's say when you break up from here, okay, so you can see the breakup, it happens when we have this particular bar here. So if you enter on the next bar, okay, let's say the highest it went somewhere is around here. Okay, around here, 7%. Yeah. So as I said, between like maybe around maximum 10% that you can gauge from there for you to take a profit from there. Okay. Otherwise, you can just avoid first. Okay. And maybe if you want to see for a long term, you can use the weekly chart to make your particular trades inside there. Okay. Right. So just be careful if there's any of a sign of weakness coming in on the weekly chart or daily chart, because usually if there's a sign of weakness there, a strong one, then you may want to avoid going at the 4-hour chart here. Okay, so that's to safeguard yourself. But if there's a strong trend upward movement, then you can enter from there. Of course, in US market, you can go for a short trade. So if you are allowed to do a short trade, then you can enter, which is no problem if you can see the weakness, a strong confirm weakness. But usually we will you have to be careful if you're trading on that or short stop, because short, if it's very fast and you fail to move out fast enough, you may get whacked by the market. Okay, so more bias on the long side. I would usually like to trade on the long trade here. Okay, right. So the next round of session for members, for next month, will hopefully in time we will share with you how you can trade using the 4-hour charts for the US market. Okay, because compared with Malaysia market, US has a lot of potential for you to make a trade. So we will share with you the strategies on how to trade on the US market. And even if let's say you make 10% pun, you times by the currency exchange, you actually make gain quite a lot from there. Okay, right. So with that, hope you learned something, and pass the session back to Martin.
All right, thank you, Coach Arif. Let's give him applause by giving him a thumbs up. Right, and I will take back the screen, and we're pretty much going to wrap up. So a little bit of sharing, Coach Arif, how he sees the market, especially now he's been focusing a lot over the last 6 to 8 months on the US market, which I actually updated with him way back in November, saying that, US market, it's a very good potential to go in, previously where many of you all, including Coach Arif, were focusing a lot on the Malaysian side in here. I'm not saying Malaysian is going to go up, but the so-called the underlying, the underlying economics and the underlying what we call the foreign funds coming in here, we are not seeing that, and we have that in the VSA 360 to prove that this kind of flow are not coming back. So we need to get those. If we can get those, then this is really impending. Because last week I did talk about the impending. What are we looking for? or what should we be watch out for? Okay. Now, if you look from here onwards, the three major criteria, which I've stated previously, is the big wave to continue to move. The sixth wave, which is the AI wave. One of them, we want to see PE expansion. And we definitely see that on the NVIDIA. Remember, right? Just now I showed with you, NVIDIA has a PE of 200 over times, but Apple and Microsoft are still in the 30s, right? So if we do see some of PE confidence because the growth in there, again, remember Microsoft has element of AI, but I don't think it's growing like 200 times like NVIDIA, which is the chips in here. But yet to be proved is secondly is the earnings growth. We want to see the earning growth, and of course, in TradingView, if you have that, you can overlay it with the earnings EPS, and you will see if the EPS are growing on a quarterly, that will definitely confirm that the boom is definitely in there. And of course, tonight we have evidence. Definitely one of them is the falling inflation should taper off. Of course, many people are talking in here 1 or 2 more interest rate hike for the remaining 3 months. Maybe may not think that the right, because every time when they hike the interest rate, that is going to be an implication of the cost. And remember, the banks that we saw early on, the SVB in March, has an implication, will cost some sort of turmoil. So we're not sure the kind of hikes they did. They did delay in June. So right now, a lot of talk is on July right now. But we will see how Jerome Powell will be saying in here. If there's a rate hike, definitely we won't be seeing tonight, probably maybe the next 2 days, or we could see a 2-bar reversal. But remember, many times when the market breakout, including the third time market breakout, then the market turn back, and that could be a interest rate hike, which do see the market correction. That's why the tonight's topic is the sixth wave with the market correction in here. So overall, many people are also saying that, hey, is this the AI bubble when we are all talking about in here, which does echo during the .com? Because right now we do see for the NVIDIA is 200 over time. So that definitely, even from the price to sales standpoint, it's definitely about 50 times, which is very, very high. So if you look back, the days where we have the bubble, definitely right now there is a baby bubble. Baby bubble is right, not the whole stock exchange, right? Maybe what we are seeing right now is NVIDIA. You can see from here, Bitcoin did have the baby bubble in 2020, and I got very excited at that time, and guess what? The whole thing just sort of collapsed. And right now we are back to 30,000, the Bitcoin. At one time, remember, it was 67,000 in here. I still know many of you who are the cryptocurrency are still holding on to your Bitcoin, all right, being very long in here. Baby bubble, yes, right? And the longer run is focusing on the trading portion. Now, one of the members did ask why 4 hours, not daily? Because right now, the market is raging up very strongly, right? And if you look at the 4-hour chart, there is opportunity in there. And one of the reasons why when you have a 4-hour chart and you think the market will break out, especially the way I would recommend, you don't want to stay up at night and put your trades. So you can put a buy stop, a buy stop limit at a certain price. If we did hit that above the 4-hour average, something I will show maybe in our market orientation in here, or a little bit example on our live training in here on that. So the 4-hour time frame, together with Coach Arif talk about the weekly time frame, will determine the longer trend. And in between, you use a smaller time frame to find the pinpoint, the kind of entry that we want. Of course, you can switch to a 15-minute or 1 hour and 2 hours in here, but the 4 hours seems to do very well because it does give us a leg room to go in when there is a pause in the market, then followed by a markup trend in here. And of course, the signs of weakness with Coach Arif do apply to in here. And the support resistance will switch to a 4-hour time frame as well as a weekly time frame. And then use the green pentagon to buy. That will give you the kind of basis in here. And of course, the continuous support from Smart Robie, those I've shared with you in here, able to get the fundamental and understanding the kind of the Robie ratings. At least we know Microsoft right now, as well as Apple has a rating on 4. So that's something you want to be looking at by just sharing this S&P 500, the Smart Robie apps among your friends. And when you share, you get 100 credit to yourself in here, and definitely worthwhile to use this in here. So coming to our summary in here for the 6th wave in here, my take is the 6th wave is going to be ongoing. There are baby bubble, definitely I've shared with you in here, NVIDIA, definitely one of them here. But overall, there are some that is not, and that's what Coach Arif talked about, the VSA 360 screen. And for those of you who have not tried out our VSA 60 free trial in here, do Texas in here, get the 10-day free trial in here, and try it out in here. Especially right now, I think with the boom that you see for the remaining 7 months, I'm sure you're able to cover back some of the educational costs that you invested in here. What more, you're asking for, which we have been all this while supporting you in here. And right now, of course, on the backdrop, there's a baby bubble, and that's why we coined the word stock market correction. So for our summary tonight, what we are looking at, buying on pullbacks, all right, important, using the 4-hour time frame, and the weekly direction will give you some sort. And again, time and time again, I've been talking a lot about diversifying to the US market here. Not saying that the Malaysian market will jalan, but definitely we will have some sort of rebound right now in the month of July. Remember, I said earlier, for the last 6 months, market has been dropping. So month of July looks good from the VSA 360. You can see a very good visual in here. And then coming off August 12th is the local state election. So we will see the market rebounding back in here, right? Take profit regularly, like what Coach Arif say, maybe like 10% or even lower, right? As the market go higher, because we don't know when the bubble will bust, bust. So that's why we want to be able to take in here. And something that we not cover tonight, perhaps in the later future, is the trading view replay, where you can backtest and trade the 4-hour chart to give it a practice why it will work for you on that matter. Okay, so that's something we look forward for those of you for our VSA 360 premium members. If you're not join us, I extend the invitation for those of you to come to our VSA 360 for our orientation and for our weekly training, because without education, a lot of opportunity will be seen as just passing by. Okay, so invest in yourself in here, and Pentagon Guider available on the Smart Robie as well on our VSA 360 in here will continue to allow you to follow the smart money in here. And of course, we at Trade VSA will continue to support you being in here. So of course, another thing is, do join the our Telegram chat room in here if you've not done so, and do share this in your timeline. So that's all we have for tonight. A little bit more than an hour. I was going to stick to around 40-45 minutes for tonight. And if you have any questions, pencil those in here. If not, continue to bring that into our Telegram channel. That's the one you can join in here, right? And Amanda has a question. Pullback seems pause. Can you elaborate more on that one from Amanda in here? Pullback is important because it allows the market to go back, a pause, a pullback in here, which is actually a pause, right? And then the market will continue, because we are still in the middle of a stage 2. But overall, we are looking at the macro economics, which is something I just shared with you, the inflation, the likelihood of interest hike by Jerome Powell in here. But the guiding principle will still be the inflation rate, which you did see tonight, gone down to below 3% in here. All right, thank you very much. Thank you for your support. And we wouldn't be here without many of your support in here. And if you want to follow us or use the Smart Robie, just go ahead and do so. And that's all we have for tonight. Thank you for coming, and thank you for sharing this video. Give us a thumbs up, and we'll continue to do our best to support you in your education and also building wealth in the coming 6 months. Right? Bye-bye. And also, don't forget, give your thanks to Coach Arif. Coach Arif in here. Thanks a lot, Coach Arif, everybody.
All right. Thank you. Thank you, Martin.
All right. Good night.
Good night.